Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within a range. We got a pullback towards the 56, 57 area where buyers were active. That was the high probability bounce that we typically get after a strong trend up day. So at this point, heading into the open, our short-term bias is going to be very neutral because we've seen over the last couple of sessions a lot of strength in this market, but at the same time, the market is again approaching some pretty decent areas of resistance. And because we are trading in such a wide range, we need to be more focused on interpreting and reading the market in real time. So we need to give a little bit more weight to how the market is shaping up in real time, how the momentum situation is shaping up in real time, and understand that as far as the bigger picture goes, now we're in a very neutral context and we are trading in such a large range that the bigger picture is not helping as much. Now, as we push higher into the upper resistance zones, especially that 89 to 92, in the event that we get there, that is a larger time frame area of resistance, and that still has potential to hold, and we will still look to short the market up at 89 to 92, 97 half, 2100. Those are big areas of resistance, but they're also really far away right now. So the problem with the market that I see is that the bigger picture ideas are not within the current range. They're not right where the market's trading right now. They are either pretty far to the upside or they are significantly lower from where the current market's trading. And that's why in order to get on board any type of directional movement this morning off the open, it's going to require reading the market in real time, determining the level of strength or weakness we're seeing in real time, what kind of momentum we're seeing on the NYSE tick and the other markets, and then it's going to have to be a real time idea because if the market is going to break out and go higher, it's probably not going to pull back to 54 to 56 half to give you, a nice entry at decent enough location. If we're going to break out, it's probably going to hold here above the previous VPOC of 61.75 and then head higher. So that's one scenario that could take place. And then if we head down into 54 to 56 half, it's going to be a second test of that area. And we need to make sure that the market is not heading down on very strong downside momentum in order to consider still fading that zone. And then below that we have 52 half high volume node, so that's an area that still has potential to hold and buyers can be active as long as we're not seeing a lot of downside momentum. As long as the momentum is still more to the upside or at least not skewed to the downside, then we can consider going long at support. Same idea goes for 46 to 49. If you break below 52 half and below 54, then on the smaller time frames, it would tell you that we are seeing some weakness now, and that could result in a pullback even down to 40 to 42 half. And that would be a decent support zone to fade first time down. That's yesterday's RTH low. 42 is a key high volume node. So, that is a larger time frame zone that can be faded first time down. 46 to 49 calls for some discretion. And then, the support zones below are going to continue to be valid and active as well, with 29.5 to 31.5 being another pretty decent spot. But for now, the way the market's shaping up, we don't really want to see a strong pullback. Ideally, we actually get some follow through and we get some balancing activity. Otherwise, you're just trading in a very volatile range and it becomes an even more challenging market to get involved with. So off the open, keep an eye on the previous VPOC 61.75, see how the market's responding to that. If we are going to break out to the upside, then ideally, like I said, we don't want to see a retest of initial support. And if you do test it, then it would put the upside breakout scenario into question. Then we may not really go significantly higher, and eventually we might even go lower. On the upside, the 73 quarter, 75 quarter is really the main area of resistance, and how the market responds to that area is really going to help set the tone for the day. If we break out above initial resistance, we can quite easily test 79 to 81. That could be a potential shorting opportunity, but it's not by any means an automatic short. If we are breaking out on strong momentum broad market strength and the other markets are rallying as well, then the spot to look for sellers is going to be closer to 89 to 92. And in the event that we even take that out, then the 97.5, 2100. As we head up into 89.92 or close to it, that is very decent resistance, and that would be a very good spot to short the market. So you can see that the larger time frame ideas are not within range; they're further away, and that's exactly why we are going to have to be more focused on reading the market intraday and determining how the market is shaping up intraday, because our short-term bias is very neutral. Our overnight bias is fairly neutral. We're just balancing within a range. And the larger time frame bias is also neutral. So just given how neutral this market is, you have to be giving more weight then to the intraday market reads, to the real-time market reads. And that does add, a layer of complexity and challenge to trading this market. So just be aware of that. And, if you are newer to trading, or if you're still working on, becoming consistently profitable, then not a bad idea just to sit out for a little bit and let the market kind of gain its footing, establish a range, or wait for it to get to, a larger time frame zone, and then just trade that, right? So if you want to keep it easy and simple, then don't get involved in the middle of the range. Don't get involved in some possible chop and noise, and let the market actually test a larger time frame zone. And once it does that, then get involved and try to get 2 to 3R out of those trades. So there's always a way to make it a little bit simpler when the market is highly volatile or trading in a big range. So it just depends on your own level of expertise and how involved you want to be. The volatility, of course, creates a lot of opportunity, but at the same time, it also comes with some added risk. So those are really the main thoughts and ideas heading into the open. Let's see if the buyers can really follow through after yesterday's strong upside move. If they are going to follow through, then ideally you want to see the market holding the 52 half HVN, the 54 to 56 half support. And if we're really in a strong market, then we could even hold the 61.75 previous VPOC and then head back up. And then if we do get a breakout, it would just confirm the buyers in control, and then we could be headed potentially into the 89 to 92, which is still going to be a hurdle. So those are the main ideas. Let's see if the buy side can maintain this control, and we will take it from there.